All right, so let's dive into today's financial landscape. We're looking at this Grok trade report from April 1st, 2025. And, the reason you're here is you want to cut through the noise. You want to understand what's really going on in the stock market, the U.S. economy, and, of course, everyone's favorite topic, crypto. And you want it all explained in a way that makes sense, right?
Exactly. We're going to break down these updates and highlight what's actually important for you.
No jargon.
No jargon. We're going to look at how the stock market performed, get a snapshot of the economy, and dive into what's happening with Bitcoin. Let's get started.
It's an interesting time right now because we're getting these different signals across the board.
Yeah, so let's start with what happened in the stock market on April 1st. Grok Trade noted that the Nasdaq, the QQQ, was up about 0.8%. The S&P 500, the SPY, was up around 0.3%. But then the Dow, the DIA, and small cap stocks, the IWM, basically stayed flat. What's the story there? That kind of difference in performance. It often kind of tells us where investors are seeing potential. Right now, it looks like they're favoring growth-oriented sectors. You've got the tech-heavy Nasdaq doing well, and the larger companies of the S&P 500 are gaining too. But then the Dow, which is more focused on traditional industries, and small cap stocks, they're lagging behind.
This is where it gets a little tricky. Grok Trade mentioned these bear flag formations on the daily charts, but they also said that there is a fight from the bulls. And on top of that, the major indices are still below their 200-day moving average. Sounds like there's a lot going on.
Yeah, there is. Think of a bear flag like this. It's a pattern on the chart that some analysts use to suggest that a downward trend might continue after a short pause upwards. But then you've got the bulls pushing back, which means there's still some buying interest.
Yeah.
So there's this short-term battle happening. But the fact that the major indices are still below that 200-day moving average, that's a key indicator that a lot of people use to gauge the long-term trend. And it suggests that the market hasn't fully shifted to an upward trend yet.
It definitely wasn't a quiet day either. Grok Trade mentioned a lot of intraday volatility, a lot of ups and downs. Why is that something to pay attention to?
High volatility like that, it usually signals uncertainty. When investors aren't really sure where the market is headed, you get these rapid price swings. As they react to news and try to figure out the next move, it means you need to be ready for some quick changes in your investments.
Let's switch gears and talk about the U.S. economy. The manufacturing PMI, it dropped to 49.0, and that's below 50, which means the manufacturing sector is shrinking. That doesn't sound very good.
Right, a contracting manufacturing sector. When that PMI dips below 50, it can be a warning sign. Because it sometimes comes before a wider economic slowdown. It might mean the demand for goods is weakening. Grok Trade said there was some concern on Wall Street about this, and that makes sense.
But at the same time, the rising prices index, it's still high at 69.4. That means businesses are dealing with high costs. How can manufacturing be slowing down while prices are still up?
That's the thing. It suggests that even though demand in manufacturing might be cooling off, the things that are pushing prices up, those haven't disappeared yet. Stuff like supply chain problems and inflation, those are still hanging around, so businesses might be selling less, but what they are selling is still costing them a lot to produce.
They also mentioned that the job market is cooling down, and the Federal Reserve seems to be taking a cautious approach. Grok Trade sums it up as solid growth coupled with persistent price pressures. What's the main takeaway for our listeners?
It basically means the economy is trying to walk a tightrope. There's still some growth happening, but inflation is a big problem that the Federal Reserve is watching closely before they make any major changes to interest rates. That's why they're being so cautious.
Okay, let's talk crypto. Bitcoin dropped 4% yesterday. It fell below $84,000, but then it started to bounce back today. That's a pretty wild swing.
Yeah, that kind of rapid price movement, it's pretty typical in the cryptocurrency market. A 4% drop might seem huge in traditional markets, but it's not that unusual for Bitcoin. The fact that it rebounded so quickly, though, it shows that there's still strong interest. People are still buying it.
Grok Trade says that market sentiment is split, though. Some people are pulling back because they're worried about tariffs, while others are buying Bitcoin as a hedge against inflation. That's an interesting contrast.
It really is. It highlights the ongoing debate about what Bitcoin actually is. Is it a risky asset that people dump when they're worried? Or is it a safe haven like gold? Which, by the way, hit $3,100. It's a question of whether Bitcoin can hold its value when traditional currencies are struggling. The fact that we're seeing both reactions, it shows that the market hasn't decided yet.
And lastly, Grok Trade thinks that Bitcoin's resilience could mean more action in the second quarter, so maybe even more of those big price swings.
If Bitcoin keeps bouncing back like this, and with all the different opinions about its role, we could see more trading activity and more volatility. as different investors try to take advantage of those movements.
So for you, our listener, this look at Grok Trade's report paints a picture of a financial landscape that's sending mixed signals. You've got the stock market trying to figure out where to go, an economy that's growing but still battling inflation, and a cryptocurrency market that's as unpredictable as ever.
The bottom line is there's a lot of uncertainty right now. We have data points, but knowing what's going to happen next is tough. Staying informed and understanding these different forces at play, that's what's important.
Exactly. So here's something for you to think about. Given this back and forth between economic growth and inflation, how might that affect your own financial decisions in the coming months? Where do you see opportunities, and where are the potential challenges? It's something to keep in mind as we see how things play out.
Absolutely. Food for thought.
Food for thought.